Bill Gates reveals NIO stock will reach this year $1,000. Are you interested in NIO stock? Would you like to know what would be the result of NIO in the future? Then we have big news for you. Hello friends, and welcome back to Stock Market News. Today, we are going to discuss where NIO stock will reach this year, so hold on to your breath and watch this video till the end. But before that, subscribe to our channel and hit the bell icon to watch more videos like this. NIO has taken a significant hit as a result of the disruptions in the supply chain that have been affecting the global economy and particularly Chinese companies. To what extent, however, does this afford us the chance to purchase NIO shares at a price lower than $14 for the first time since August 2020? Since the beginning of April, the price of each share of NIO has been steadily moving downward. Since then, they have already suffered a loss that exceeds 30%. This is largely attributable to the stringent zero-COVID lockdown policy implemented by the Chinese government. As a direct result of this, NIO sales in April totaled only 5,074 units. That was almost a 50% decrease from sales in March and almost a 30% decrease from the same time period in the previous year. However, the analyst team at Morgan Stanley warns that the sales drop in April was already quite predictable and that investors should continue to watch Chinese stocks closely only after the holidays in China in May have passed. Concerns about regulation are appearing once more. Investors are once again becoming concerned about the regulatory pressures that are being placed on Chinese companies. NIO and more than 80 other companies have been added to a list maintained by the SEC that could result in their delisting if the companies are unable to comply with more transparent financial accounting methods. A new negative impact was caused by the news on Chinese stocks, particularly NIO, which experienced a drop of approximately 4% almost immediately after the news broke. The announcement in March by Chinese regulators that they were considering relaxing their stringent regulatory policies for U.S.-listed companies led to the best trading day for Chinese stocks in the past 14 years. Both the iShares MSCI China ETF and NIO saw gains of 20% and 36% respectively in a single trading day. However, despite the fact that there is still a possibility that NIO will be delisted, it is hoped that Beijing will be much more receptive to working together in regard to stocks that are now listed in the United States. NIO stock is still far from being a bargain because of the general state of the macroeconomic environment. Investors do not want to hear about NIO because the company is a prime example of a long-term growth stock. NIO is a highly speculative stock in the technology sector, and the company does not anticipate turning a profit until 2024. The price-to-earnings multiple, which is calculated based on earnings per share for 2024, is more than 60 times, which is considered to be quite high. It is also important to keep in mind that this is a common trait of growth stocks and tech stocks, which are valued predominantly for their technological potential as opposed to their sales units and profitability. This is something that should be taken into consideration. Despite the fact that NIO shares have experienced a sharp decline of almost 60% year to date, it is difficult to say that they are a bargain. However, it may be reasonable to think that the market may be underestimating NIO's potential for growth. If the company can demonstrate that its business model is capable of growing significantly above expectations, particularly if it becomes the dominant electric vehicle player in the Chinese market, then its shares are likely to experience a significant upward trend. However, considering all the headwinds that Chinese stocks and the technology sector have been facing recently, making a purchase of NIO right now is a risky bet to make at this time. There is a significant possibility of profits on the upside, but there is also a substantial possibility that investors will see their funds disappear into a black hole. The possibility of NIO stock remaining flat is the one with the lowest probability. There is no room for compromise here. Either NIO shares will experience a precipitous decline, a highly likely scenario, or they will soar to new heights, low probability, but with the potential to make shareholders very rich. Now let's have a conversation about the price of NIO. NIO may be getting closer to achieving its goal of creating an electric vehicle brand for the mass market. Following the precipitous drop in price that the NIO stock experienced on Monday, the electric vehicle stock began trading on a bullish note on Tuesday, reaching a high of 8.3% during early morning trading. Although NIO shares gave up most of those gains and then some as the day progressed, as of 1:35 p.m. Eastern Time, they were back in the green. Given the significant piece of breaking news that arrived this morning, it would have been easy for NIO shares to maintain momentum throughout the day if it weren't for the choppy market conditions. NIO shares have been under significant pressure this week as a result of the sell-off in the stock market, as well as the possibility that NIO shares will be delisted from exchanges in the United States. NIO's case was not helped by the fact that a major shareholder, Norway Central Bank, Norges Bank, reportedly sold its entire stake in the electric vehicle manufacturer in the most recent quarter. Therefore, when a website based in China that focuses on new energy vehicles reported a development this morning that sounds significant to NIO's future, the market was quick to swoop up some shares of the electric vehicle manufacturer, particularly after yesterday's crash. This was especially the case after the market had just experienced a significant loss. According to a report that was published by CNEV Post this morning, NIO has reportedly signed an agreement with an economic development zone in Hefei, China, to build a plant for the new mid to high-end brand that NIO plans to launch. According to CNEV Post, the plant is projected to be finished in 2024, at which point it is anticipated that production will begin. NIO's new brand will compete with the likes of Tesla and Volkswagen, and it has been reported that the company's first sub-brand products are already in the key development stages. This is a very significant thing because it confirms NIO's intention to launch a brand aimed at the mass market, which is something the company has frequently discussed. NIO CEO William Li even elaborated on the matter during the company's fourth quarter earnings conference call, explaining how the company will not launch vehicles with large price gaps as Tesla has done in the past. Instead, the company will focus on a price range of $30,000 to $50,000 a car in order to appeal to the general public. It is anyone's guess whether or not NIO cars will beat Tesla, but if CNEV Post's most recent report is any indication, NIO appears to have its goal in sight. NIO has stated on multiple occasions that it has aspirations of developing affordable electric vehicles for the general public that are also superior to Tesla automobiles. When the company decides to officially announce any progress on its mass market brand front, I wouldn't be surprised to see NIO shares rise, and when that happens, investors who are panic selling NIO shares now may look back and regret their decision. Tesla may be the most well-known brand in the market for electric vehicles, but it is far from being the only one. NIO, based in China, is also a competitor and expects to deliver a record-breaking number of 25,034 electric vehicles in the fourth quarter of 2021. It shipped 91,429 battery-powered automobiles throughout the entirety of the year. NIO is only about a tenth as old as Tesla, despite the fact that this number represents less than a tenth of the 936,172 EVs that Tesla shipped in 2021. Even taking into account the relatively low number of 11,348 electric vehicles that were delivered in 2018, the automaker is actually expanding quite nicely. In spite of this, the entire EV industry has barely scratched the surface of its potential future. The Energy Information Administration of the United States estimates that the total number of electric vehicles that will be on the roads of the world will increase from less than 10 million at the present time to 672 million by the year 2050. That presents a substantial amount of opportunities for automakers such as Tesla, NIO, and a whole host of others who intend to fully immerse themselves in the market for electric vehicles. It would appear that investors do not see it. Following an exceptionally positive 2019, NIO share prices are now down 50% from their all-time high in January of 2018. So, I think we're at the end of the video, and I hope you enjoyed the video, and if you did, then give this video a thumbs up and smash that subscribe button and press the bell icon so you will never miss any updates. And if you have any questions or queries on your mind, let me know in the comment box, and also check out our channel where you'll find more really cool stuff.